Is everybody wondering what happened to the rates yesterday? Let's talk about the lending world with Fun with Math with Chad Johnson at Bell Mortgage. Welcome, Chad. How are you doing today?
Great, Cari Ann. Thank you. How are you?
Well, I'm excited to talk to you. I want to talk about what's happening now and what your predictions are for 2025, Chad.
Are you sure you're going to be happy to talk to me after I deliver this news? Or
Yes, I'm positive.
all right. Well, there was a Fed meeting yesterday, and
Hmm.
the Fed announced that they did cut the Fed funding rate by a quarter point, and then they announced that they're expecting to slow that next year to possibly only two cuts the entire year next year.
Interesting.
So immediately as that announcement is made, the stock market went down, ended the day down 1,100 points, which is the biggest one-day drop from a Fed meeting since 2020. So it's a pretty drastic drop in the market yesterday.
It'll
Okay.
come back.
It will. It's already back about 190 points ish right now today. So it's coming back.
Hmm.
The other thing that happened is what happened to the 10-year Treasury bill yesterday.
Okay.
So if we look back even just a few weeks ago, the 10-year Treasury was at 4.19.
Okay.
It ended the day yesterday at 4.519.
Wow.
So the Fed cutting a quarter and the stock market dropping yesterday actually had a negative impact on mortgage rates yesterday. When I look at rates this morning, in most scenarios, we're seeing an eighth to a quarter% increase over what they were just a few days ago. So,
Hmm.
not the best news we were hoping for interest rates, but like you said, things are already starting to come back a little bit this morning.
Absolutely. Well, and just from the 25 years of watching this rate, the moving target, I call it,
Yep,
which is certainly not the motivator for many. It is for some. It does affect some, but
for
certainly
sure.
not the motivator for life change, right?
Right. Yep.
I believe personally that we're moving into a 2025 market, and I know you can speak to this on whatever level you want, but I do believe we're going to see a six in there, absolutely. And I think that we're going to be back in a place that is quite normal. When you look at the past 5 years, Chad, and we've talked about this so many times, that cycle was simply not a normal cycle. It just wasn't.
Not at all. I mean, it was great while it was here.
It
Great
sure
for
was
buyers, great
great.
for sellers. Chaos in the industry on our side,
I
but it was
know.
great, but not sustainable. I mean, we're back to a normal market on what rates have been the last 30 years.
And they
So we're at
certainly
that
have been much
average
higher,
point
don't you
again.
agree? Certainly they've been much higher.
Absolutely, they have.
Hmm.
They've been higher than they are right now in the last year, as a matter of fact.
Absolutely.
So, um, I
So on that note, tell me what your thoughts are on assumable rates. Like what are you seeing in the market? Because we had record low rates there for a couple of
yep,
years. How is that working? What are the options for those that can do an assumable? And for those that don't know what
yeah.
that means,
So
explain what that means.
yeah, so assumable mortgages mean you can take over the mortgage that the seller has on their property. Okay.
Hmm.
There's very few assumable loan products out there. It would have to be an FHA loan or a VA loan. And when you do that, you work with the seller's current bank, pre-qualify or pre-approve yourself with them, and you take over their mortgage at their interest rate.
Right.
Make up the difference in what your down payment is, or possibly look at doing another mortgage option behind the assumable loan. So
Hmm.
I've talked to a few people in the last 3 or 4 months that are going through the assuming process where they're taking over a 2.75 rate. It's a lot better than where the rates sit today.
Right. And I think that's one of the reasons I'm bringing it up. I mean, it's not for everyone, but it
No,
absolutely is an option for some. And
for
many
sure.
don't know that that's even a possibility. They're just not,
Yeah.
they don't know what they don't know, right?
Yeah.
So when you are looking at your price range and how you're financing, leading with that question when you visit with Chad, when you talk about options, you can quickly profile the client and say, hey, so what I always say to the view to my audience, to a client who's looking for a recommendation, I'm I'm not the numbers gal. I'm not going to do the math. I will push you along to Chad, and you will literally look at the DNA of their financial makeup, and
Yep.
you'll say, this is where you're going to see the best success. This is what this looks like now and in the future, which I love about you.
Yeah, and it's, not everyone's the same. I mean, you think that the interest rate's this, that means everybody gets that, right?
Hmm.
Everybody's scenario is a little bit different. Could be a credit score difference, could be a down payment difference, could be a loan size difference.
Hmm.
But when we take a look at that scenario for you, we're going to walk through and say, okay, if you do things today, this is what it is going to look like.
Right.
If we go off what market trends are saying, don't always come true, but if we go off what they're saying, this is what it would look like in a couple of months. Or if
Hmm.
we fix these few things on your credit, we can get you into this loan program. So I think it's important, regardless of what you think your situation is that we take a look and just fine tune it and get it exactly right for you.
Right. So let's jump into jumbos for a minute. What does
Yeah.
that look like? Because there's been some recent changes.
Yeah, we're actually seeing jumbo rates and conventional mortgage rates get close together again.
Hmm.
But with the new increased loan amounts, I mean, you can buy $1 million property with 20% down and avoid a jumbo mortgage right now, which is just going to be easier to get through underwriting.
Right.
You can have a higher debt ratio and get approved. You don't need the after closing reserves to get approved for that. So lots of exciting things on that are in the market now too.
Yeah. So those changes were fairly recent.
Yeah.
Hmm.
Actually, we started them a couple of weeks ago.
Okay.
They go fully into effect on January 1st, but we started with locks a few weeks ago already.
Okay. So lay out the bullet points quickly on what that looks like exactly. What's the DNA of that?
It all has to do with loan amount, right?
Hmm.
So depending on what your sales price is, you can now do a jumbo loan for over 805 or a little over 805,000 is where
Okay.
that break is going to be now, where you go from conventional to jumbo.
Okay.
Once you get into that jumbo arena, there are some options out there with less than 20% down, but most of the time you're going to have a 20% down payment and a little bit harder underwriting.
Hmm.
The good news is, like I said, there are options where you don't need that 20% every time. So
Right.
again, looking at your scenario, interest rate might be a little higher to do it at 10 or 15% down, but what are you going to use that additional money for?
Right.
Conversation financial planner, if you can hang on to that extra $100,000, what can you make that money do for you?
Right. And that's the conversation that you're having in terms of the money movement. I call it the domino effect of how you can make the money work for
Exactly.
you. If this, then that for everything, every decision you
Yep.
make, right? So for
Right.
those out there that are in their first home position where they're buying a first home option, tell me what's going on right now in the DNA of that. What's that look like for
Yeah.
them in
So we
terms
still
of
have
getting into a house?
lots. Yeah. We still have lots of down payment assistance products that are out there. There's still the 3% down option for a first buyer or 3.5% with FHA. The biggest thing that I always counsel with first time buyers is we want to look at getting you to what your budget is comfortable for you. It's not always what you can get approved for. It's where do you want to be approved and what can you comfortably fit into your budget.
Hmm.
So we look at that number and we'll go a little bit lower than that and a little bit higher than that. So when they are out looking at houses, they can say, okay, we know at this sales price, our payment's going to be about this, but this house is 10,000 over what we're thinking, but what does that really mean? So we can look at what those payment differences and cash out of pocket differences mean.
Exactly. And for what I call the atypical, if there's such a thing, your atypical buyer between, let's say, 500 and a million, what is the
Yep.
favorite DNA of that loan structure right now for people in your mind? I
The,
suppose there's some
the,
variety pack there.
the one I'm seeing the most often right now in that price range is between 20 and 25% down.
Mm-hmm.
They're doing that loan with, getting into, again, finding that right payment range on what's that difference between 20 and 25% down mean for them.
Right,
Um, all of them are doing a 30-year fixed right now because ARMs really aren't back in the market yet.
right.
And most of those, honestly, closing in 3 weeks.
3 weeks,
So
so you can be into your new
now
space.
look what you did.
That's awesome. A little comedy.
Back.
So you can be closed and in your home before the end of January right now, easily.
Absolutely. Yep.
Mhm.
Yep.
Absolutely.
Don't
That's
say end
really,
of don't say end of December, Carrie Ann. That's a crisis warning. But
I
end of
know,
January, we
you're
can make that
right.
happen.
I'm like, oh my gosh, next week is Christmas. How can that be? How can that be? Okay, so if people want to track you down, Chad, how do they do that? We've got our show notes and we'll be dropping all your intelligence into all of the platforms. How do they find you to figure out what kind of loan they can, what's going to be best for them based on what they're looking at?
Call, call, text, or email anytime, or my website is chadb, as in boy, johnson.com.
Perfect. Chad Johnson, everyone. Bell Mortgage, the knowledge broker, most certainly. If you're looking to be advised on what your next move looks like, then give Chad a call. We're spending so much time with the team building this show out just for you. Please do click and subscribe to the YouTube channel so we can bring you up to date on all of our newest shows, listing, and lifestyle videos. Thank you so much for watching. See you next time on Fly the Coop. Thank you, Chad.